Hi, this is Alan Gassman, and we welcome you to this instructional video on how to use the EstateView software. I'm here with our software developer, David Archer, MBA. Hi, David.
Hey, Alan.
And we are looking at the software here on a single screen. Now, please keep in mind that you may have 2, 3, or even 4 screens going so that you can spread these things out, and we're going to show you a lot of different approaches to how to use this. But for a single screen, you're going to see your data entry along the left-hand side. You're going to see your choice of views in the middle. And on the right-hand side, you're going to see all the scenarios that this software will show you for any given factual situation. The scenarios on the right for each factual situation are, number 1, both spouses die this year with no planning. Number 2, no planning in the future with growth. Number 3, a credit shelter trust with growth. Number 4, annual gifting in addition to a credit shelter trust. Number 5, discounted gifting. Number 6, all of that plus life insurance. And number 7, either a large gift to a grantor trust and or an installment sale to a grantor trust. Now, the data entry is very easy. Any secretary can do it. On the left-hand side, you put in your firm name, which can be Alan's firm, and you can delete your firm. And then the name of the planner, of course, and then the name of the first spouse, Harlan Sanders. And when you click on the arrow, you're able to give Harlan's first name, last name, age, and these arrow buttons allow you to simply click to move the age up or down. Then male or female, tobacco user or not tobacco user, how much exclusion the client has used in the past, we might say $500,000. This tells you, based on the age and the tobacco use, what the probable date of death is based upon a standard life insurance mortality table, 2031, or if he stops smoking, it's 2034. And then you set the date that you want to show the client's death, and in this case, we say 2020. Now we go to the wife, Claudia, and with Claudia, we open the box, name, age, sex, tobacco user, lifetime exclusion use, when we think she's going to die. We may give her an extra 3 or 4 years. Wealthier people typically live longer. And then we go to their asset information. Growth rate of their house, 303%, which is an average national average. Current value, $750,000. Let's look at their business and investment assets. We'll say they're $8,250,000, or you could make it $8 million. Growth rate, 8.2%. Annual fees and taxes, 1.5%. How much are they saving while they're both alive? $300,000 a year. He's a good earner, or she's a good earner. Maybe we can reduce that to $200,000. How much will they spend net after the first death? We could say that they'll spend, that the surviving spouse will spend $100,000 a year. Whether there's portability or not, and how much the bypass trust will be on the first death, and it will tell you the maximum if you scroll up with the consumer price index increase at a assumption that we're going to show you below. The credit shelter trust can be at most $5,620,000. For some clients, you'll estimate lesser because they might have a lot of assets in IRAs and things like that, or you might elect portability instead. Then your gifting, you could use, what discount are you going to use if you're going to do discounted gifting? What's the gifting trust worth now? Maybe it's already worth $500,000. How many crummy powers do you have? That would be 3 children, which would give you 6 crummy powers in this example while they're both alive, then only 3 after one dies. What portion of your gifting is actually going to be discounted versus cash? So we could say 100% discounted. What percentage is going into the trust and not going to be spent? We can say 100%. Then we can go to life insurance. With the life insurance, do you have an ILIT or not? Maybe not, maybe so. Is it a term policy? If so, what's the premium, number of years, and the death benefit? And it will assume that if the person dies in year 11, that there will be no death benefit. If you go with a permanent policy, it will ask you the number of years premium, and it will assume that the policy is fully paid after that number of years. You have a policy ability for both spouses, and then you have a policy that you can put in for second to die. So that's the second to die policy. Finally, if you want to do an installment sale, and we'll come back to the installment sale in a little while, then what's the consumer price index, because that's going to influence the growth in the exclusion. What's your estate tax rate? If you're in a state that has an inheritance tax, you can increase this. And then you always want to use constant dollars. If you use depreciated dollars, the clients will get confused, but the ability is there. So once you've entered your data, or while you're entering the data, there are two different ways to view all of this. What I've been showing you is a timeline view, but let me switch to trust logistics. So see up here across the top, there's 4 options. The first is trust logistics, and that's the display you see here. If there's no planning, here's what they have at the beginning. Here's the growth rates. Here's what the surviving spouse has. On the second death, there's the total value of assets, the total of the exclusion, plus the portability allowance, and a net estate tax of $7,906,000. By the way, if you say, but wait a minute, the surviving spouse remarries and then their spouse predeceases them, you click over here on the left, assume no portability, and you see that the estate tax is instead $10,178,000. On the far right, let me show you each of the scenarios now that this software will show you based on those scenarios. Number 1, clients want to know what happens if the plane goes down. Hopefully they've paid you before the plane goes down, but if it does, in their situation, they don't have any estate tax because they're under the exclusion right now, and we assume portability. So they're not going to have any estate tax. But based on the dates of death that we showed you with no planning, we go back to a $10 million estate tax. We can show it this way under the logistics, or we can show them the timeline. The timeline shows them how much the estate tax would be based on when the surviving spouse dies. And the red is the amount coming out of their assets. So before the death, you have the $36 million you see here. After death, you're down to $27 million. And then if you want to show without portability, you just click the assume no portability, and that changes the number back and forth based upon whether you assume portability or not. Now, let's say they want to use the credit shelter trust, then I can hit bypass trust, and then you actually see the bypass trust along the bottom. Above that, you see the gifting trust that we talked about. And when I go to logistical, you also see the bypass trust here, and you see the estate tax much lower. If I go to annual gifting, then it's going to show me the bypass trust and the gifting trust, so that you see them both and you see further savings. If I go to discounted gifting, I get even further savings. And if I go to life insurance and use life insurance trusts, I might have more savings, I might not, because I'm using annual exclusions to pay for premiums. But it does show you each of the life insurance trusts, or at least the life insurance, whether it's taxable or not, to get you to a result. Let me show you something kind of neat. When you go back to any mode, such as bypass trust, and you change any number, such as yearly savings, everything changes simultaneously. So also under the timeline, the same thing. If I change anything, any assumption here, every number is going to move immediately. So I can basically decide what the best combination of things to show the client is, And I can show them right on screen that if you change a particular scenario, the client may say 8.2% is too high. Show me 6.2%. Okay, at 6.2%, there's not as much of a risk. But what about 10%? At 10%, there's a much higher risk. So that you're able to generate these scenarios, and you're able to show both the trust logistics and the timeline at the same time, if you like, on one screen or on multiple screens. Let me show you now the installment sale feature, and I'll do it using the timeline. So this client, I can show them that under the current scenario, using credit shelter trust, using life insurance, using a bypass trust, they still have a lot of estate tax. But what if today they make a seed capital gift of $250,000? I'm sorry, I'm on the wrong screen here. Here they are with the installment sale. And you see the estate tax there in red, and you see that these other planning techniques have reduced the estate tax. Let's move their assets up, move their growth rate up, and see that they have a more serious estate tax situation. But what if they make a seed capital gift of $250,000, which you see on the left-hand side, and then they put $1,250,000 into an LLC. They gift a 99% LLC non-voting member interest. They take a 25% discount. The value of the sale is $1,050,000. They use a conventional note bearing interest at only 2%, which will mature in 9 years, and you see they would still have an estate tax. But what if they do a $500,000 sale and they put $3.4 million into the LLC? This could be a gift by one spouse. Your spouse could be a beneficiary of the trust, and that's what would zero out the federal estate tax. Okay, now, this is a situation I want to show my clients. It shows that the credit shelter trust saves a lot, but there's still a lot of estate tax. It shows the gift trust saves more. Now I would like to write them a letter. And I don't know about you, but it would probably take me about 2 hours to write a letter describing this. Instead, you go up to the left-hand side and you hit Generate Client Letter. You click that, and the program is now going to Word, and it just wrote the letter for me. So here's the letter. It's a document that I can save on my computer, and it explains the estate tax system. It explains the assumptions. It explains the first illustration of no planning and the estate tax. It explains the bypass trust. It describes the savings. It tells you how much is saved by each of these techniques, so that the client has something they can take with them. It's in color, it looks good, and it explains what all these trusts are, why they're needed, and the reasons that you did them. Now the client may take a look at this, and I'll close this. The client may take a look at this and say, wait a minute, I prefer to see lower value, and I would prefer to discount higher. My friends told me they can discount higher. What's the results? Okay, fine. We'll print you another letter now. And in fact, we could compare the two letters. Easy to compare the two letters to show you what the difference is in savings. So those are the primary features. And David, I'm going to let you go ahead and chime in on what I've missed.
Thanks, Alan. I think you covered almost everything in the software with that, that illustration. I think the only other two pieces that potentially are of interest for folks using the software, there is a details tab also along the top that gives you some more information, more in a spreadsheet type format. just kind of on a 5-year interval, what are the different values that are changing as far as the residents and the exclusions and the person's the assets. We also have their life expectancy information down there as well. And then the final thing is the annual amounts, which actually let you kind of peek under the covers and get a little bit better understanding of how things are changing over time in the software, how the projections are actually working. So you can look at things like the bypass trust, and you can actually see kind of the year-by-year changes to various accounts that the software is tracking in order to make these projections.
Okay, now I'm going to take you to the second part of our software, and that is the installment sale calculator. I don't know about those listening, but our firm does a lot of installment sales. Clients really like them. So I click installment sale calculator, and this could be for a single person. I'm able to zoom this spreadsheet and move it left and right, and I'm able to say, here's the initial assets at the top, $25 million. Here's what the client spends a year. The client spends, let's say, $250 a year. Annual growth rate 8%. Income tax as a percentage of the assets 1%. 2% is more likely. Lifetime exclusion used. Seed capital gift amount. Sale value of the assets placed into the gift. Discount rate. Sale value after discount. And by the way, these three are hinged. So if I want to move that up, it recalculates the bottom number. If I move the percentage, it recalculates the top number. That's really convenient. That gives me my note amount. My interest rate, I will pull off of the AFRs. I'll have to go to Tiger Tables or Number Crunchers to get those. Estate tax rate, CPI index for the exemption, conventional note or self-canceling, number of years until the balloon. Typically it's going to be 9 if you're going to use the midterm applicable federal rate. And then what if the client wants to toggle off grantor trust status after a few years? I can show that. Number of years to project, as many as you like. So what do I have here? What I have is a really nice spreadsheet. You can take the client column by column. Here's your net worth. Here's your net worth without the note. Here's your annual growth. Here's your annual expenditures. There's the payment you receive. There's the tax you pay for the trust until 2027. There's your taxable estate. There's your exclusion. There's your estate tax liability. And there's the tax savings from the arrangement based on the year of death. And of course, if I went to a skin, the tax savings would be more pronounced, and then I could increase the sale amount to where I would have 0 tax. So I can solve for how much of an installment sale do I need to do to get the tax down to where I want it to be. Then on the trust side, it's showing you annually the assets of the trust, how much it owes on the note, that's the non-discounted assets, how much the growth is, income tax paid before the trust or by the trust, the note payment, net assets, how much is going to pass estate tax free on the death of the grantor. So that's the installment sale module. The one other thing I want to show you is that you do have the ability to save your information. So once I'm done with this, where I have it where I want it, I don't want to have to set it up again the next time. So I can save the settings, and I can save the settings in my computer. I can put the date or the information, and then I can come back to them later. They're in my computer. They're not in the cloud. This is a program that you're going to download onto your own computer or your own laptop, and it's going to be yours, and your client data is going to be yours. I can also save a particular screenshot. I just go there, I hit save screenshot, I give it a name or a number, I hit save, and then that screenshot is saved, and I can find it later on my computer when I want to see it. Finally, Dave's done something really neat here. I can click on Trust Logistics panel there, and I can lower it to where my arrow gets to either the center or top or right. And if I lower it to where my arrow gets to the right and then I take my finger off my mouse, then I can watch this on the right and this on the left. So that if I'm on a single screen, I can show the client one way and then the other way, or both ways at the same time. One other thing, and that's very useful, you're able to disconnect these and move them from screen to screen. Another thing that's very useful is that in the timeline screen, if I'd like to show what would happen if the first spouse died later, I click on the line and I just move it, and all the numbers move automatically. I can even reverse the order of death. Watch this. I can reverse the order of death to see what happens the other way. So those are the many things that this software will do. We are continually updating it. When you go to download it, we will send you a link. You will click on the link, and your computer will download the software automatically. If your computer is like my computer, it's going to say, are you sure you want to put this in your computer? It's not a recognized software. And then you push yes, I trust this software. If you're with a big law firm or a big CPA firm, you may have to talk to your IT person to get it onto the computer. When we update the software, we'll send you a new link, you'll click on it, and it will automatically update the software. Dave, any words of wisdom for us here?
No, I think that's it. Thanks a lot.
Okay, we welcome any questions, comments, and suggestions. We thank you for using or considering our software, and I hope you have a fantastic day. Please do send me emails at agassman, A-G-A-S-S-M-A-N, @gassmanpa.com. Let me know your questions, comments, and suggestions. You may see them in our next update. David, thanks again, and everyone have a great day.
Thank you, Alan.